can you put your business expenses on a personal credit card? Well, you can, but what are the consequences of that? And is there something else that you should do instead? So the reality is, yes, of course you can. There is no law or anything stating that you cannot make a business purchase on a personal credit card. It's probably just not the smartest thing to do. So by the end of this video, hopefully you have clarity on what you should use your personal credit card for, your business credit card, and what really matters the most to your accountant and to the IRS. So what really matters the most is keeping your finances or keeping your expenses straight. So if you kept a detailed spreadsheet of this is a personal expense, this is a business expense, and you happened to actually use the same debit card or same credit card for both of them, that would be fine. You've got, say, a paper trail, or you've got records showing different purchases, and you've kept it clean and organized. So if you ever had an audit, you could provide this information to the auditor and say, these are all the business expenses, these are all personal, and I didn't write those off. But it actually happens automatically if you had two cards. So you have a debit card that's personal, and a debit card or credit card that's for business, and you pull one out, depending on if it's personal or business. So that way they're separate automatically. So I've had my accounts separate since the beginning of my business. However, let me give you an example of where I've used personal funds for a business expense and how I handled that. So I wanted to buy something off of Facebook Marketplace, right? So somebody in the local area, I was actually decorating the library and I wanted to buy some encyclopedias to put up on the shelf. And they wanted cash for those. Well, I don't really deal with cash in my business. I have a checking account, I have credit cards and whatnot, but the cash that's in my wallet, I keep it there and it's just for personal stuff. So, but I use that personal funds for this business purchase. So in my bookkeeping, in my accounting, I have a personal withdrawal and I have personal contribution, money that comes from personal that goes into the business or that I withdraw, like if I'm giving myself a paycheck. So I just made a record for the amount of this purchase. I took a photo of the item that I purchased and I made a record so that using these personal funds, I could still write it off as a business expense. Let's talk about this from the IRS perspective, right? What do they care about? Well, as business owners, we have certain write-offs. We get to consider some things business expenses, and so we don't have to pay taxes on those. What the IRS wants is for us to pay taxes on our gains, on our profits, or on our earnings. I'm not an accountant, so I don't know exactly how that works. I have a CPA do these things for me, but it makes sense, right? So think of it this way. If I sell a product, but to buy that product, it costs me so much, so that might be called cost of goods sold. So let's say 50% of the price that I sell it for, 50% of that are my costs. It makes sense that that's a business expense. And if I sell something for $100, I don't have to pay taxes on the $100. I just have to pay taxes on the $50 markup. But if I had to pay for shipping to get that to somebody, if I had to pay for utilities to keep the electricity and the air conditioning on to be able to sell that, those are also all business expenses. So you get to take all your revenue but subtract all those expenses and you only pay taxes on what's left over. So let's look at it from the CPA perspective, your accountant that you hire to do your taxes, and they're giving you advice. I want to let you know that they work for you. You're paying them, okay? They're professionals and they know what they're doing, but they all have different perspectives. So for example, one CPA might look at the law and say, you know what? The food that you buy in your business, these meals that you're paying for, you only get to write off 50% of that. That's what the IRS allows, only 50%. But another accountant might say, well, it depends. Is this food more of a meal or is it catering? Because catering, you get to write off 100%. If I put on an event and I do some grocery shopping and I have a receipt from Costco for all the groceries that we bought, we cook up the food and we serve this meal at this event, most accountants would consider that catering, and so you could write that off 100%. But some accountants would look at that as, oh, that's a meal, we can only write that off 50%. The reason I go off on that little tangent is because many accountants will tell you, yeah, you cannot put business expenses on a personal credit card. It's just because it's difficult. I mean, but some accountants can say, yeah, it's a real pain to try and keep those separate. But if you do your bookkeeping right, if you keep proper records, of course you can use a personal credit card. Now, if you're wondering, like, can I buy a ping pong table and have it be a tax write-off? Can it be a business expense? What about a swimming pool? What about a yacht? Is there any way, What about a Tesla? Can I buy a Tesla? Okay, I'll just let you know, I have 2 Teslas. One of them I have to pay for with personal money and it's not a tax write-off. But the other one, it's 100% a business expense and a tax write-off. It's pretty cool. So the next video that I recommend that you watch right now is how to start a business for tax write-offs. Go watch that one next.